I'd like to welcome everybody to our meetup. Tonight looks like we might just have a little one-on-one time with Rich here, so and that's fine. He's expressed some interest in learning more about apartments and learning more about me. So he just asked me kind of a little bit about my plan B and about real estate and a bit about my journey. So um, for those who may not know, I am a retired nurse anesthetist, and I have basically not done any anesthesia since August of 2019. And so ended up, I was in a situation where we were kind of having, I was having some 1099 slowdowns, and my youngest daughter had some issues with daycare. Basically, my wife and I had used a daycare that was associated with the hospital that we used to work with, and they had new management came in and said, "Hey, you know what? You haven't worked here in a few years. This is a service that we provide for people who work in our hospital system, so you've got 30 days." And so at that point, I made the decision to be a stay-at-home dad, and we had figured out with some of our lean times with the 1099 work that we really didn't need as much to live on as we thought we did. And so I was able to transition into passive investing through apartments, and that has provided us with enough income to keep things running, pay the bills and do what we need to do. So my wife does still work. She is an occupational therapist in the school system here in Winston-Salem. And so the nice thing is that she's got summers off, she's got weekends, she's got holidays, all those things that you kind of hope for in a job. She's got all that free time, and now I have that free time as well, and so we can go and do things the way that we want to. I don't make what I used to make, uh, you know, as a CRNA. That's not really where our priority is. I mean, we've got our money invested into apartments, so over time, the income from that will grow. And but for right now, we're just comfortable. It's we're not like breaking the bank or anything, but the time freedom that we have, the flexibility that we have, is a really powerful thing for us. So now, Rich, if you wouldn't mind, I mean, I don't know much about your background, and if you have any real estate background or anything like that, if you could tell me about that.
All right. Well, I do not have real estate backgrounds. I saw your Facebook page, and it intrigued me. We actually met on the CRNA and NP cryptocurrency Bitcoin
Hmm.
site, and
I'm
at
all
some
over the
point.
place. I look at everything. That's.
But at some point, I will be interested, and I've actually bought books on real estate investing, even small apartment investing. So this is something that I've been interested in for a long time, but never had the capital, to be ready to get out there, or the know-how
Hmm.
uh, to do it correctly, you know.
Yeah,
Because I assume it's most like other things. If you run out there, without having a plan, you're probably not going to work out too well for you. So um, this is just something that I'm interested in, and at some point, um, I too will probably break away from doing anesthesia work and just investigate some other things that I'm interested in as well.
absolutely. I like to have a plan. I like to have things in place that, basically what this is going to look like in, a couple years and 5 years, 10 years down the line. Um, and I tell people all the time that real estate should be a portion of your portfolio. It's not
Mhm.
meant to be, the whole piece. For some people it is, and that's fine. Um, but for CRNAs in particular who you're still working and you've still got that income that's coming in, you can set yourself up really well for you know different types of income that you can have in retirement whenever that retirement is going to happen, whether it happens earlier, later. basically it's about building flexibility. And
Sure.
that's the thing that real estate allows you to do that, I feel like the stock market doesn't necessarily allow you to do, at least the way that we typically invest in the stock market, which is through our retirement funds and things like that. It can be a challenge to create side income that can help you out when I mean, I'm 40 years old. I was not going to be able to tap into my retirement accounts until I was 60. If I kind of went the regular path that everybody else takes, we're all told to take this path, and you diversify in stocks and bonds and such. And the truth is that the world's changing, and we kind of have to figure out a different way to diversify, get away from some of the market risk that is inherent in the stock market. Stock market's still an important part of your portfolio. Um,
Mhm.
but I feel like, for me at least, I like to have about equal parts of apartments and stock market, and then mixing in maybe some other things, dabbling in some other things here and there. So uh, the one of the things that I am intrigued by is crypto, but that's another conversation, I think. But yeah, as far as the apartment investing, it really depends on how active or passive you want to be. This can be an incredibly passive endeavor, which I find very attractive for working professionals. You can basically, if you save up money and you put it into an investment with operators who have a track record of doing right by their residents and doing right by their investors, um, you can really be very successful without having to be on the active side. A lot of people think real estate and they automatically go to the idea of owning single family rentals or small multifamily and managing properties themselves, putting in time to paint walls and put in carpets and do all kinds of things that really, when it comes to the apartment space, you can choose if you want to be that active or not. When you choose to be that active, then you're talking about needing to build teams. Okay. And that's one of the big components of it. When you're talking about investing passively, you really just have to find good operators, and then work on the markets that you want to be in. So my personal investing philosophy is that I like to invest in different types of asset classes in different markets. Okay, and I actually just put up a couple of YouTube videos to talk about what those differences are, but I'll go into it here too. Um, basically the asset classes that you have are A, B, C, and D properties. Okay, it's just like grades in school. The A properties are the best of the best. They've got the best amenities. They're in the best neighborhoods. People with high incomes are living in these apartments. So
Mhm.
those are, like I said, at the top. Then you've got your B and your C properties. And these are properties that are maybe a little bit older. They're still, can be great places to live. I was just in an underwriting, basically a meetup, an underwriting meetup last night with Leslie Awesome, who he's another CRNA who actually is big into apartment investing. He's on the more active side. And so he and his partners have actually, purchased big apartment buildings and gotten investors involved. And, they do underwriting and whatnot for these different apartment buildings. And the apartments that he showed me, for last night's underwriting exercise, it was, it would be classed as a C class property, but it's a place that I would feel comfortable living in if I were looking at, for a 2 bedroom, 1 bath apartment. I mean, it had a gym, it had a pool, it had, all these different things. And the reason it was a C class was just because, well, it's an older property. The bones are older, and the renovations maybe weren't quite there, to make it a B class property. So you've got a lot of different ways to invest, and so I like to invest primarily in B and C class properties, with some A. I do have some investments in A, and so basically, my portfolio right now, I am passively invested in 6 different apartment offerings across 4 different states. So 2 in North Carolina, 2 in South Carolina, 1 out in Idaho, and 1 in Colorado. And it's a mix of A, B, and C properties. Um, but my core, what I want it to be is B and C. And the reason for that is because it's just more resilient to shifts in the markets. Mainly because if you have good times, then people are moving up from D into C, from C into B, B into A. So at those times, it's fine to be in A properties. You don't really want to have D properties when it's good times, because nobody really wants to
Mm,
live there. They'll spend the extra money and live somewhere nicer. Um,
sure.
the opposite is true during bad times, where people say, okay, well, I like these amenities in the A properties, but you know what? I just had my hours cut, in half, so I can't afford to live in this nicer property. So I'm going to move down into B, B into C, and the like. So that's kind of why I like the B and C, because you're just going to have that need, that demand there all the time. So, and then um let's see, we got somebody else coming in here. But then, basically we've got your different markets. And so you've got primary, secondary, and tertiary markets. Those are kind of based loosely on population and markets and growth phase for certain cities. So your big market cities like New York, LA, Chicago, Boston, those are your primary markets. And there's a lot of talk about cap rate compression in those primary markets right now, and so that's something that you know people are concerned about. Things are getting more expensive, but that's not always the case when you get down into your secondary markets. Markets like Raleigh and Charlotte, and even Atlanta is considered to be a secondary market.
Mm,
The Tampa Bay area, places like that are, they're more in a growth phase. Their populations are kind of shooting up. They're still really rapidly growing, and so there's more, and a lot in Texas too. I mean, the Dallas Fort Worth and Houston and all those, Austin, all those areas are all prime secondary markets where there's a lot of action. Now you are seeing prices rise in those areas. There's a lot of competition. Um, but the thing is that the reason there's competition is because, right now there just happens to not be a lot of new construction in working class housing. And that's something that, um, it's unfortunate, but with all of the building costs increasing and everything else, if you've got people who are going to build something, they're going to lean towards building an A class property because they want to make the most money. They want to get the most bang for their buck. So you've got all of this workforce housing that's not really expanding. So more demand with a limited supply equals higher rents and generally speaking, more chance for appreciation for investors. So that's what we're seeing right now, and we don't expect that that's going to change. But anyway, so my philosophy again is to invest in different markets across different states, different asset classes, primarily in that B and C stuff. And like I said, I've got six offerings that I've invested in. 4 of them are outside of retirement accounts, so I actually cashed out money from my retirement accounts and invested in properties to create income now. And then the other 2 are actually in self-directed IRAs.
mhm.
So, and that's worked out great. I mean, the nice thing is that with passive investing, it's actually a fairly simple process. Basically, you are looking at a deal, and you say, "Hey, I want to know more about this deal. I want to invest in this deal." So you're contacting the operators, or in my case, what I do, On Call Capital, I work with multiple operators across the country to provide offerings to investors, and I'm an extra set of eyes for you. Essentially, that's what I do. Um, and I'm part of the deal on the general partner side, generally speaking. So that's I'm able to come in and basically be your eyes and ears and make sure that you're in a good situation as an investor. And that's, you know, that because I wouldn't be offering it if it if it weren't a good offering. So again, it comes down to trust. Like if you trust me, you trust my judgment with a deal, you trust the operators that I'm working with,
Mhm.
then that's really the name of the game. And so I am, personally invested with three different operators. So you don't have to just choose one. It's not a bad thing to have operators in different parts of the country, because when you get into a particular market, it's kind of hard to get your foot in the door. So you want people that are there, that are established and know what they're doing. They've got the great relationships built already. And like for instance, I've got two investments down in South Carolina. That's with the same operator, and they use the same property managers for both of the properties that they have, and most of their properties down in South Carolina. So they have these routines already established, and
Mhm.
so basically they can kind of rinse and repeat when they purchase more properties. They've got the team in place, they're ready to go from day one. So that's where having that experienced operating team can make a difference, because you don't want to just put your money into somebody's hands that they're learning on your dime, essentially.
Mhm.
Basically, I mean, that's from a passive standpoint. You get the paperwork, you sign some papers, and you utilize the wiring instructions to wire the funds over, and then you're a part of the deal. Um, with a self-directed account, it's a little different because you have to go through your custodian with that self-directed account, and they have to get all of the paperwork and see that the deal is actually legit, and basically check off on it, and give you the go ahead, and then they'll take care of wiring whatever amount that you need them to over to the operators. But what
So
kind
does
of
that
questions?
amount from your self-directed account, does that come out and is gone forever? Or is that something that they still custodian and stays in your IRA? No, I don't know how property and investing works.
Yeah, so that stays, it's in your account. It still counts in your account.
Mhm.
But it's just not money that you have access to. So it's in that
Sure.
deal, it's being used. So, and that's the thing with all of this. I mean, with the investments that we have outside of it, well, we don't have that money. It just shows that we have invested it in this, deal. To get your money back out of a deal before it's finished is a bit of a process, and that depends on the operator as to how easy it is to get your money back out ahead of time. But that
Mhm.
being said, a lot of these deals, the way that they work is, they come in, and within the first 2 to 3 years, they're trying to implement the bulk of their business plan, and that way they can get the units renovated that they need to. They can start charging the rents, and start bumping those up to the market rate, because typically when you're getting into an offering, their market rents are higher than what your building is currently renting at. So you
Mhm.
have some wiggle room there to start to increase rents for your market. And so with that, the way that you control the price of an apartment building is through your income and expenses. So it's not like being in a neighborhood, and the house next door, or my house, let's say for instance, if you took my house and put it in a different neighborhood in town, it would command a completely different price. You know,
Sure.
you take I mean, you think about the prices in LA and San Diego and stuff. I mean, buying, you get a postage stamp lot, and it's going to cost you, seven figures. So that's not the way it works in apartment investing. The prices of properties are based strictly on the income that they produce minus the expenses. So now, of course, being in a nicer area allows you to command higher rates. Being in a downtown area, you can command higher rents. Um, but generally speaking, this gives operators control over that investment, because they can adjust how much they are getting for these rooms. They can adjust, based on all of what they're putting in. Um, how much they're improving the property, what amenities they're adding and things like that, and how they can, kind of get the most bang for their buck. So they are directly in control of how much money they can make a property worth. So, if you've got good property management and you come in and a property's 85% occupied and you're able to bump that up to 95%, well, that all matters. That's a big difference. And so all of a sudden you've automatically increased the value of your property. So you can now go to a bank and then you can do a refinance. And so that's the plan in year 2 to 3, typically speaking, is when they look to do a refinance and get investors a good portion of their money back on their deal. That, or they're looking, if they've completed most of their deal, most of their business plan within the first 3 years, then, somebody else may want to come in and purchase this property. Maybe they see some other things that they can do with it or whatever, but they can come in and purchase it, and you can get your money back right away and all of your profits back right away. I actually, there's a deal that was out in Arizona, and unfortunately I had already used all of my capital from my retirement accounts that I was going to use. And I saw this deal come across. I'm like, oh, that looks like a good deal. And I'd like to invest in Arizona, but I just don't have the capital right now. Well, 16 months later, they just sold the property. Everybody just doubled their money within a year. I'm like, oh, great. That's the one I missed, but I mean, the thing is, there's always more deals, and there's always, different markets that are performing in different ways. So, getting into markets that, are those growing secondary markets is a big deal, but it's different
And
from the passive side.
I would imagine those guys who do, sell the property, they're probably always looking for the next thing too,
Oh yeah.
So have you been a part of that, where you've been a part of, a sale, and then they ask you if you want to do it again, on another property?
Well, so I keep track of, I'm on several different operators' email lists. And so, I see, the kind of work that they're doing, and some of them just have more offerings than others. And it depends on the markets that they're in. It depends on the reputation of the team. Part of that whole idea of having a team that has a track record, it also means that brokers are now going to come to them with a deal that's off market. You don't have to wait for deals to come on market, because typically if it's coming on market, it's not a great deal. Most
Right.
of these deals get done off market. So when you have folks that have done deals, and completed a deal with a broker, that broker says, hey, I'm going to go back to them because I know that they'll do what they say. And they'll, if they're going to invest in something, they'll get the job, or, they'll get it across the finish line. So as far as me personally, I'm getting ready to go through my first refinance of a property for my investments. So that's going to be something that's going to be fun to talk about when it comes in July-August timeframe. So yeah, and I'm not expecting it to be as big as some others might have been. The way that the management team is working this refinance is a little different. So it's not going to be normally when you go through a refinance, the operators are trying to get you, roughly half or more of your initial capital back. So if you invested $100,000, they want to try to get you back 50. And again, that's also so that you can reinvest that money into another deal, and now you're starting a snowball. So that's kind of the idea behind it. And when you can refinance like that, that really actually increases your overall returns in apartment investing, because again, you can take that and just refinance it, or you can take it and put it into another deal. Yeah.
That's kind of what I
So
was getting at with my question there.
okay.
And it seems that passive investing is attractive for folks like yourself. And what I'm thinking about, if you want to invest in other markets where you're not going to be, physically, separated by hundreds or thousands of miles, you can't really be actively investing in, 10 different properties. I guess you could, but
It's
that would
it's
be
a
one heck of
challenge.
travel allotment.
Yeah. There are folks
But
that do that and they're able to do that. I'm not one of them. It's not one of my
yeah.
strong suits. I prefer to have a good team that's doing that work and I do have a single family property that's down in Center Point, Alabama, and it's doing okay now. It did not do okay when I first bought it. That was a supposedly turnkey property. That was my first foray into real estate investing.
Hmm.
And because I had been listening to Bigger Pockets and all these different um podcasts that were telling me you got to get into real estate, got to get into real estate. And I had determined, okay, well, we're going to do a single family portfolio, and we're going to, I'm going to go through this process, and you know eventually we're going to get to the point where we've got 20, 30 properties or something like that. And um it was amazing, the headache being a more, even though this was supposedly a passive investment, you're still having to go through the banks to secure loans. As a passive investor in apartments, you don't have to worry about any of that. The operators are taking
Yeah.
care of all of it. So, basically, if you can write a check, um, that's how you can get into apartment investments. Um,
Mhm.
and it's nice that it didn't always used to be that way. There were a lot of income requirements and things like that. But now that the rules have changed a little bit, you've got the ability for what are called sophisticated investors. So, you've got accredited investors and you've got sophisticated investors. Accredited investors are people who either make $200,000 a year on their own, or make $300,000 with a spouse, or
Mhm.
have a net worth of $1 million. And it's strictly money requirements. Now, a sophisticated investor is actually, I'm considered to be a sophisticated investor. I don't meet the parameters for accredited investing. My wife and I fell shy of that, but we, basically, a sophisticated investor is somebody who is determined to have enough knowledge in a particular investment to know the risks involved and what they're getting into, and you know, eh, basically, I had a conversation with each one of the operators that I've invested with, and they can determine that I'm competent enough to be able to invest in their deal, and it's not something where I'm using my grandmother's last 50 grand and investing in this deal in the hopes that it's going to be something. You don't want
Sure.
to be gambling. That's not what this is about. These are these investments, it's not a get rich quick thing. You're not going to get rich overnight. Real estate still does take time. The returns are steady and boring, but still fantastic compared to other investment vehicles. And I like that steadiness, and that steadiness, when you really start to diversify into that, it smooths out your returns for your overall portfolio very nicely.
Well, I'm
I
definitely
like it.
interested in passive, earning some passive income and through investing in apartment properties. That's kind of, like I said, that's been kind of one of my long-term plans to not be doing, a 9 to 5, in another 10 years, because as you know, even just working CRNA, it will wear you down, working call and all sorts of stuff. I work in a smaller community hospital. There's not a whole lot of us. We have a lot of autonomy and it's great, but we work.
You got a lot of call, I'm sure. You split
Yeah.
that call up.
And you may not, I know I don't want to do that for, till I'm 65 or whatever. I'm 51 now. So
Yeah. Oh, you don't look it
I'm
at all.
approaching
I would have never guessed. I
I'm
got more
approaching that
gray
time
and
where
I got more white in my beard than you do, buddy.
I
But yeah, man, it's and that's the thing. I always struggled with when I first got into the profession. Like, everybody's like, you got to put as much, you got to max out your 401ks, you got to do this, but just shove money away. And I'm thankful that my wife and I are savers. We saved a
Mhm.
bunch of money, but at the end of the day, it was putting it into accounts that didn't really pay us out at all along the
Mhm.
way. And so, if I could go back 10 years, I think about it and it's like, man, if I had invested in apartments 10 years ago, wow, I'd be just awesome right now. We'd be killing it.
Yeah.
But the main thing is that you don't know what you don't know, and you don't get that information. You know, it's hard to find that information. It's easier now. More of this stuff is coming out, and you're just able to do more with various types of investing, as you well know.
Yeah.
You can't. It's not just the stock market anymore. You can invest in all kinds of things. So
Yeah.
there are obviously good and bad to that as well. Um, there is risk in real estate. You can lose your money in real estate. Um, but when it does come to apartments, I feel like if you're investing in people, if you're investing in good people, that do the right things by others, then I don't it's hard to go wrong in this business. And I don't want to ignore our other guest here. I would love it if you could tell me how to pronounce your name. Um, I don't want to butcher it in front of everybody, but you could also stay silent too if you'd like. It's up to you. But anyway, so Rich, any other questions that you have? What else? What
Um,
else can I tell you?
well, let's see. How did you get involved with passive investing in apartment properties?
Well, so I basically I was listening to podcasts like crazy. I had all these extra days. I was only working 3 to 5 days a month at the time. But so what I was doing was I was listening to different podcasts, trying to figure out alternative streams of income, essentially, and real estate seemed like the best thing. Um, I can't remember. I think what I think it was. I think I was listening to Bigger Pockets, and they had an interview with Michael Blanc, who is big in the apartment investing space, and he talked about how you can get into apartment investing and be financially free within 5 years. And he's a great speaker. A lot of energy and just a lot of knowledge in the space. And so I was like, okay, well, let me check this out. And so I started listening to his podcast. And then on his podcast, I've been listening to it for a couple of months, and I had determined, well, maybe I'm not as big a fan of this active side, of investing. And then he had a gentleman on by the name of Ryan McKenna, who is basically the founder of McKenna Capital. And Ryan came on and just talked about the benefits of passively investing, how you can just build wealth through passively investing in these apartments, just being an
Mhm.
investor on the limited partner side, and how you're going to, beat the returns of the stock market over time, and just have those nice steady returns, get this nice income along the way, all the tax efficiencies that come along with owning real estate, you get those benefits and more. With bonus depreciation and cost segregation of these apartment buildings, um, you get just a ton of benefits. And so, when I heard that, I said, I need to talk to that guy. And so I reached out to him, and um, 4 of our 6 deals are actually through McKenna Capital, through
Mm.
different
Okay.
operators that he has. And so I actually, I've modeled my business after his. He's got a kind of a different clientele than I do, obviously. I'm really working primarily with healthcare professionals and CRNAs in particular. And that's really who I want to help. That's where I want to be. Um, he's working with a ton of investors, and he's somebody who, he's very reputable in the space. He's been doing this for several years now, and has been very successful. But the biggest thing is that he, the investments that he's come out with, from these different operators, they're all very reputable operators. They have experience. They do great work, and I've been very pleased with the investments I've had with them. Um, but it was really a stepping off point for me, as far as just being able to learn what it looked like to be an apartment investor. What does it look like to get these monthly statements? What do you, what's the information within there? tracking those numbers from month to month, seeing what the vacancy numbers look like as they're going through renovation periods and things like that. So, and I can say too, with, COVID and whatnot, um, there were people who, were unable to pay their rents or had trouble paying full rents and things like that, and the cool thing though is that, as much as we'll hear in the news and stuff, or political pundits, whatever, saying, oh, these people are lazy, they're just living off the government or whatever, and they don't want to, they don't want to pay their rents, they don't want to pay for this, they don't want to pay for that. That's, I found that to be very far from the truth. I mean, sure, you're going to have outliers, but most people really want to pay their bills. They want to do the right things. They don't want to have to move from an apartment, like it's a pain in the butt to move all of your stuff from one place to another. Why would you not want to pay your rent and then get kicked out of a nice place? So again, if you're working with operators who are actively improving a property and making it better for the residents that live there, those residents want to stay, and they're okay with paying a little bit more because they're in a much nicer place. And there's just, there's a sunk cost that they have already living there. Um, so people want to pay. And so, the operators that we worked with, um, they worked with the residents and they said, okay, well, let's offer some incentives. You know what? Hey, if you can pay us on time, we'll give you a $50 Amazon card this month. You know, if you pay us by this date, full price. Or hey, let's work with you. You know what? Your rent's 800, you can only pay 600 for the foreseeable future. That's fine. We're going to backdate this stuff and we're going to work out a payment plan for you. Because getting $600 is darn sure better than getting nothing. And so, just working with people, treating them like people. They're not just tenants. They're not, just there to make money for you, and they're not there to be used. They're people. And that's, you want operators that, they see people, and that's a big part of this business. It can be win-win-win for everybody involved, and that's the way that I like to invest, and that's what makes this so much more attractive to me than like with single family and stuff. If you've got 10 properties and you've got a property manager, well, they're not going to get paid anymore whether or not you're, I mean, they may be managing thousands of units. So if you've got, two properties that aren't being rented out, well, what are they losing? Like $80 a month on each one. That doesn't hurt them. They're, so they're not incentivized to carry out what your business plan is, because they have their own, set of incentives. And so when it comes to apartment investing, things are just set up differently, and it's nice because that everybody's on the same page and pushing towards those same goals. So
yeah, your team really can make you or break your operators. What you're saying.
yeah.
Same. Customer service is, it's a customer service business as well.
Mm-hmm. It sure is. And that's, and I'm very happy with the operators that we've invested with, and the ones that I'm partnering with for On-Call Capital. I'm very pleased with them. They do great work, and they take care of people, and that's what you want. And if you're an operator who's not doing that stuff, eventually it can come out. You might make money in the short run, but eventually that kind of stuff starts to come out, and you're not as successful anymore. So I think that's the coolest thing about being a part of this apartment investing community has been, seeing all of these people who are, the term landlord gets thrown out there, and people think of evil landlords and stuff. But the people who are operating these apartment buildings, they, legitimately care. They want to help people. And I think that's a really cool thing to be a part of.
And is this something you see yourself doing for the next 15 or 20 years?
Mm-hmm.
I do. Do you have another plan?
Well, so it depends. So I've got 3 kids, and they are 10, 6, and 4, about to be 11, 7, and 5. So part of my idea is to build this business and um, for it to possibly be a legacy business. If one of them or two of them or all of them want it to be. Um, but otherwise, I mean, this is something I the thing that I tell people is like I mean I could be on social media more. I could be blowing up things and being out there a lot more than I am. Um, I don't want to do that. The reason I invest in apartments is so that I have my free time with my family. So,
Sure.
I run this business and sure, I'm not trying to, hit up people hard for anything. Um, I want it to grow organically. I want to develop relationships with people and have these conversations and if people like me and they want to invest with me, that's great. If you want to invest somewhere else, that's fine too. Either way, like I'm still getting mailbox money from my investments. I'm okay.
Mhm.
But the main thing is that I just want to bring awareness about this stuff um to the CRNA community and the healthcare community because so many people don't realize um the kind of situations you can get in where you might need a little extra income on the side. I mean, you go and you break a leg, and I mean, all of a sudden you can't go into work, or you all of a sudden develop really bad wrist problems, and now you can't intubate. Um, those are real problems that people can develop over time, or can just happen to you in an instant. You get in a bad car
Mhm.
wreck, and all of a sudden,
Yeah.
um, you have a traumatic brain injury or whatever the case. We see it all. I mean, we see it all. Um, so it's just not a bad thing to have a plan in place for obviously when you're ready to retire. If you want to work for 30 years and retire in your 60s, then that's I mean, hey, go for it. I mean, if you're the big thing for me is creating flexibility so that you can chase your passions. If you're passionate about anesthesia, by all means, you know, uh, continue with that career and continue getting paid well for a job well done. But
Mhm.
if you decide that it's not for you or it's not your passion, then you can have the flexibility now to say, hey, you know what? I don't want to work full time. I want to go down to 2 days a week or 3 days a week, whatever it is. And I want to pursue some other things outside of this career. We should all have the freedom to be able to pursue those passions.
Absolutely. Well,
So that's kind of what I'm about. And like I said, I'm letting this grow organically and naturally. Obviously the pandemic has affected some of that. I haven't been able to go do anything in person. So,
right.
getting a hold of people on social media and Facebook and Instagram and stuff. I mean, people don't want to give you the time of day, and I can't blame them. It's hard. People are skeptical, and so it's okay. I'm not worried about it. I'm still okay, and I'll be here. Whatever people decide. But I do enjoy this. I've actually enjoyed putting out the podcast a lot more than I expected that I would. And it is more work. Certainly. Now I do have an editor who edits a lot of things, so that's a good thing. But it's a lot more work trying to be in the content creation business, but it's been really rewarding to have conversations with people and just figure out what they're doing. Um, figure out what makes them tick and to see, wow, they did this thing completely differently than I would have. Or wow, these are the common threads that we've got going on and you see it throughout the community. Um, so it's been a neat journey so far. I've only been doing the podcast for a couple of months now. Um, and it's I couldn't be happier with it. I think that it's been a fun journey so far and got a lot more planned, of course, but we'll see how it all goes over time. But I hope that answered
Well,
the
I think
question. I
this is,
talk a lot, so
and I don't even have, the questions to ask. Like I said, this is still, new to me, but just a coincidence, it's something I'm interested in. And
Mhm.
I saw it on Facebook. So I definitely wanted to get involved and see what you had to say. And I'm going to keep investigating and looking. And it's something that I'm fairly certain I will do in the
Yeah.
future.
Yeah. I'll shoot you some resources. I'll get your email and shoot you some resources there. I mean, of course, a lot of people lean towards bigger pockets, and there are a lot of other apartment investing podcasts out there if you wanted to learn more about
Mhm.
that. Um, I already mentioned the name Michael Blanc. He's got a great podcast. He's leaning a little more towards some of the passive investing now. He's pushing that a little bit more than he used to. Um, but there's just Jake and Gino is another one. Um, gosh, of course I'm drawing a blank on some others, but there's a ton out there. The Diary of an Apartment Investor. If you're looking to, if you're new to this stuff, I was actually on that podcast back, gosh, was it last April or August or September? And it's with Four Oaks Capital, Brian Briscoe, and he brings on kind of a newer investor and a seasoned investor, and that way they can learn from each other and ask questions and find out stuff. So you might get some beginner questions answered there, but r- there are resources all over for you. But I'll shoot you a few of those. There's some good stuff out there.
Appreciate that.
I don't know if our other guest has any more questions or anything. You can put them in the chat if you don't want to talk. But yeah, man, it's been nice during the pandemic. You know, I w- we were slightly concerned about whether or not we would continue to get our the distributions and whatnot. I'm happy to
Yeah.
say that none of those stopped at all. None of them reduced at all. We didn't have any problems during the pandemic with any of that, and part of that is because of the economies of scale that you have when you invest in apartment buildings. Generally speaking, you have a break even point between 60 to 70% for any given apartment investment. So what I mean by that is that um, basically if your occupancy is between 60 to 70% or higher, then you're at least breaking even or making money.
Okay.
So if your vacancies drop, then that's something that you have to be concerned about. But during the pandemic, none of my investments actually dropped um, down below, what was it, 84%, I think was the lowest I saw. Um,
Nice.
so that's still, I mean, you figure that's still 15 to 20% higher than what you would have to have. So we do have a question here. So how are you finding apartment deals and what size are you looking for? So very good question. And that's highly dependent on the markets and your team. So um uh, this is a good question. This is a really good question. So first off, how are you finding apartment deals? Relationships. You find these deals through relationships, either with brokers, other apartment investors. A lot of times with these larger deals, you're talking 100 units and up, perhaps 250, 300 units. Those kinds of deals are ones that you might have to pull other people in because you need more capital. So it's one thing to find a deal, it's another thing to finance it. Okay. And as you can imagine, if you're trying to buy a deal for $15 million, for purchase price, well, you have to come up with a certain amount of that capital. So let's just say 16 million for ease of thinking about it. So 25% of that's $4 million that you have to raise. Plus, you have to raise enough to be able to carry out the rest of your business plan. It's not enough to just buy the property. You also need to do your capital expenditures for renovations, and maybe you need to put in a dog park or put in a new playground, or whatever. You need to upgrade the clubhouse. So all that stuff costs money. So typically, if $16 million property, you're probably gonna raise at least 6 million to be able to do everything that you need to do. If not even more than that. So raising that amount of capital and taking down that big of a project, sometimes you need more people involved, and so you'll have different operators. So you might have one capital team here and one capital team there, and they're partnering on this deal. and then providing it to each of their investor bases. And that way they can raise the funds together to be able to take this down. Now, as far as what size you're looking for, that is dependent on a couple of things. So when an operator is looking at certain deals, they're looking at, okay, do we want to use our own investor base? We have a strong enough investor base that we can take this down ourselves? Or are we looking to partner with other people? Or are we looking to what's called a joint venture on a deal, where maybe it's a smaller deal, takes a lot less capital, and it's just the operators themselves. They don't even want to get other investors involved. They just want to maybe, like say, hey, there's a 30-unit building. Our operating group's going to go buy that and run it. And it's not going to cost us much to do that. We all have enough capital from, that we can put into it, and we can own this property jointly. It's a joint venture between, 2, 3, 4 folks. So that being said, for my company, On Call Capital, if, generally speaking, I'm coming in as somebody who's assisting in the capital raising process. I'm bringing, an investor base that's going to help invest into a property. And I will be bringing my own talents as well to the general partner table, going through due diligence and things like that, walking the property, seeing the things that need to be improved, and being a part of that whole operating process. But generally speaking, a lot of the operators who are looking for passive investors, they are needing to invest in deals that are at least 50 units, if not closer to 100 or more. Because otherwise, when you're getting below that 50 to 100 unit number, these are deals that don't need extra capital. So you're not looking for passive investors to be involved with those. You would rather keep more of the pie for yourself. Does that make sense? So, yeah, basically, so for On Call Capital, the deals that we have are going to be closer to 100 units or more. And that's because we want to be able to offer these things to passive investors, across the country. But so I say that. Go ahead. Did you have another follow-up?
Yes. So is there like a criteria in properties that you would look for, or certain areas?
Sure. And you may have missed some of that earlier, but basically you're looking at different markets. I am generally not investing in primary markets that are the big cities that are established, like New York, LA, Chicago, Boston, those kinds of cities. You're looking for areas that have more high growth, and that's both in population and economy. So you want job growth in those areas as well. Communities that are having a ton of people coming in. So, those are generally speaking secondary and tertiary markets. So, and that's, basically the difference between those two is tertiary is just a little bit smaller. So, a city like where I live, Winston-Salem, 200,000 to 300,000 people. We're not a secondary market like a Dallas, Fort Worth, that's high growth, but we're still having good growth in our city. So we're considered to be a tertiary market. You're looking for basically so when you're looking for deals, you're looking for a couple of different things. You're looking for properties that are somewhat distressed. Okay. Good bones. You want to have good bones to the property, but you want a property that needs some renovations, needs some upgrades. You also want to look for a property that has below market rents. So you need to be able to do market comps in the area, the apartments around you. So that takes making some phone calls. When you're analyzing deals and stuff in an area, that's why it helps to have boots on the ground in an area, or else you're going to just be making a lot of phone calls yourself to different apartment complexes around and pretending to be a potential, renter, and saying, hey, well, how much, I'm looking for a 2-bedroom, 1-bath, how much is that, where you are, and looking to move to town. So
Yeah. So with that said, you're talking about reaching out to the property managers.
No, well, yeah, you'd have to reach out to property managers for other properties. So now you do want to have relationships. So when you're talking about active investing, you really have to have a team to do that. Okay. So you have to have um, basically somebody who's doing your underwriting, your analysis of properties when you have these deals. You're going to have a broker or two or three that you have contact with that you're finding out more information from. You're developing that relationship with them because they're going to be the ones that provide you with deals. Okay, these off-market deals. Generally, you're not looking for on-market. You're
Yeah.
looking for off-market deals. If it's on market, it's not going to be the best deal, and
Yeah.
that's
That's the biggest issue I've been encountering
okay.
as far as finding deals that have not, been stepped on, or it's like a bad deal because it's been on the market for 8 months.
Yep.
And,
And so, one of the other things too, so you want to have these relationships with these brokers, okay? Because they're going to be the ones that they're kind of the gatekeepers for these deals. They have the relationships with the owners of these properties and things like that. But one of the let's see. So you're gonna want relationships with property managers as well. You want to have a business plan. The biggest thing you want to have is an idea of what you're looking for as an investor. And so this is a common problem that a lot of new apartment investors will have, is that they'll go up to a broker and they'll say, okay, well, you know what, I want to get into apartment investing. Give me, just show me whatever you have. Between, the broker will ask, well, what do you want to see? Oh, well, just anything you got. I'm interested in apartments. So send me apartment building. Well, okay. That could be 20 units. That could be 250.
yeah.
If you're not coming to them with an idea of the size that you want, then they're not going to end up sending you anything, because they know that you don't know what you're doing, and you're probably not going to close for them. So if you go up to them, you got to have an idea of what you're looking for. So, if you go up to a broker and you say, hey, you know what, I'm looking for properties that are between 20 and 50 units. That's what I'd like to get into, because I'm more interested in joint ventures. I'm not looking to involve a huge capital group or anything like that. I want to find something that's, 25, 30 units, something like that I can make a good payday on. That's going to make more sense to them, because then they know, okay, well, I can, anything that I get that's in that, 20 to 50 unit realm, I can just shoot over to them. And then what you want to do then, okay, is you have to give them feedback. It's one thing for them to send you something, but then you need to actually analyze the deal and then let them know, hey, you know what, I looked over this, and have a bit of a dialogue, but just let them know, hey, I looked at this, maybe this isn't quite what I'm looking for, and here's why. And that way you can kind of fine tune what you're looking for, and they can get a better idea for you and how serious you are. And I don't know if what your process has been for that. And what you're actually looking for, where you're located, anything like that.
I'm located in Upper Westchester, New York.
Okay.
But looking in the Northeast area. I've been looking south. I've been looking in Florida.
Mm-hmm.
What I've encountered, not in New York City, but what I've encountered in the Northeast area, particularly in Connecticut,
Mm-hmm.
Fairfield counties or Litchfield counties, is that the cap rates are like 5%.
Mm-hmm.
There's no room.
Yeah.
There's any room to and these are the advertised deals. So I'm like, okay, if it's at 5%, if it's at 4.8, 5.1% is advertised, an market deal, I don't think I'll get a better deal than that.
So here's the thing about cap rates. A lot of investors do tend to get hung up on those. I will say that I know investors that are out in California dealing with 3% cap rates in LA that are still making a killing. Okay. You don't want to just get caught up on a number. You want to get caught up on the cash flows of the property. And so that's where I talk about, is a property, are the rents under market? What's the market looking like in the next few years? What are the projections for that market? Is population growth going to continue? What's the demand like? What are the projects in those areas for new workforce housing? You know, I mentioned earlier that we've got a lot of Class A housing going up. Well, if you're looking in Class B and C, then you don't have to worry so much about Class A. That's not going to take away from your demand for your property that you're looking to get into. Um, but what is the demand like for the property that you're looking at? Is there a lot of housing in that area that's just like it that you know is also under, you know, you can say under market rent, but you know it is whatever's around it. So if your rent is right there, you know, for instance, the underwriting deal that I looked at last night in the meetup, basically we were questioning whether or not the rents really had as much room to rise as the broker was saying, because the broker obviously wants you to get interested in a deal, so they're going to tell you certain things. You have to do your own legwork to find that out. But yeah, I mean, in the Northeast, you know, that's not a, I mean, you can still find deals. I don't know the Northeast very well, and I don't have a lot of contacts up there, but you know, you may do better to go into the Southeast and to Florida and to Texas and Arizona. You know, look at these hot markets. You know, the Pacific Northwest is another area that's starting to really pick up too. You know, but look for these metros where there's a lot of growth, and you know, start focusing on those secondary, tertiary markets. I think you're going to just be better served in those areas. It's hard to do when you don't live nearby. I'm, you know,
Yeah.
so in that instance, what you have to do is you're going to need to start attending some of these apartment meetups, these virtual meetups, and start networking with people and finding people in those areas. You know, there's a great meetup on Friday afternoons, and it's basically it's a lunchtime meetup is what it's called. It's at 1 o'clock on Fridays. Um, and Brian Briscoe of Four Oaks Capital does that. And you're basically just meeting with other apartment investors, and they're all over the country. They're investing all over the country. So you can meet somebody who's investing in a market that you're interested in.
This is meetup called, sir?
Oh goodness. Let me pull it up here. Hold on. Oh, you know what? I can get it on my phone. Hold on. Oh, it's the TGIF multifamily meetup at lunch. So and what I could do if you want to drop, I don't, you know, if you want to drop your email privately to me or something like that, I can shoot you the link and that, or the information about it at least. I'll shoot that over to you on email.
As far as on-call capital,
Mhm.
Basically, you would find a deal and you would raise funds
Mhm.
To support the deal.
So basically, I work with operators that need help with their capital raising process, and so they would bring a deal to me and say, "Hey, you know, do you want to be a part of this deal with us?" And so then I would then go through the deal myself, perform my own, you know, set of due diligence, and determine whether or not it's something that I'm interested in. And a lot of that, again, it depends on the operators. You know, I've got you know, 3 operators that I'm currently working with. I'd like to expand that to 5 or 6. And so you know, I'm going to save the chat real quick. And so the idea is that I want to have offerings across the country for investors to be able to invest in, but have it to be, you know, through me. You know, that way you've got kind of one place that you can go and find that information, instead of having to be on a bunch of different newsletters and email lists. You can just be on this email list and get access to those offerings.
so what's your criteria in the deals that you're looking for?
So yeah, I basically, you know, I'm big on B and C asset classes, and I'm big on those secondary markets. That's just where the movement's at right now. So you know, these markets that are kind of hot markets, and then some of the ones that are maybe a little bit sleepier, but they're tertiary markets. And the reason those make sense is because there's not as much demand. So you know, I do like some of the smaller deals right now. You know, the 20 to 30 unit properties. There's just a lot more meat on the bone, and there's a lot less, people going after those kinds of properties.
Yes.
Just fewer investors are seeking those out because you've got all this money coming from Wall Street and from these investment bankers and, these hedge funds and stuff. They're all putting money into real estate because of the volatility of the stock market. And so all this money's coming in. Well, when big money comes in, where does it go? It goes to these big market areas like your New Yorks and LAs. And so that's what's compressing the cap rates in those areas, but it's not quite getting to these secondary and tertiary markets. So that's where I think the deals are right now, is in those secondary, tertiary markets. And so as far as my individual criteria, again, I want to make sure it's a distressed property that needs fixing up, that my team has experience in fixing up that type of a property. If you're investing with operators who have only worked with C properties and all of a sudden they're going to take down an A property, well, there's certain things, there's a learning curve to that. If you've only taken down 30 unit properties and all of a sudden you're going to take down a 200, there's a learning curve to that.
Yes.
So I want to invest with operators who have experience with these things first. But before putting my money in the hands of somebody who's just going to put, they're going to be learning on my dime.
Okay.
So, but that's it. And every deal is different. Every offering is different, and there are always offerings out there. But my thing is I want to invest in good people and good systems, good markets. And so there are different things that will come around and you'll see it. And I mean, it's hard to explain sometimes, but when I know, and that I know that's not the most helpful statement, but when you get into this, you get that feeling, you understand those things more. And you'll see, I mean, you've looked at enough deals, these on market deals, and you'll see it and you're like, well, that's a crap deal. Like you could see a deal sometimes from a mile away that's just not going to work out for you. And every investor is different. Everybody's got different criteria. There was a deal that I was looking at, and I just didn't like the way some of the stuff was written. I knew the area. I live in the area. I didn't, it was for accredited investors only, so I couldn't invest anyway. But I didn't feel comfortable offering it to my investors. And of course, that deal is going gangbusters right now. They're doing great with it, but it was a longer time period than I want, and I want to be able to offer people, more of that 5-year to 7-year time period. This was a 10-year hold. And it was going to be a longer time to get your money back. So that's what I look for. So I like to get paid while I'm investing. I think that's going to do it for us. Unfortunately, the internet connection got a little unstable there. I really appreciate the time. I apologize for my internet going kind of wonky there at the end, but I think we'll just go ahead and call it a night. Hey, we'll always have this meetup again. So if you guys want to reach out to me and whatnot, I'm going to be emailing each one of you guys with some information. It was a pleasure talking to both of you this evening, and we're going to go ahead and call it. So y'all have a wonderful evening.